CNBC TV18, celebrating 15 years of leadership.
Hello and welcome to Indianomics. Well, the industrial growth number for October showing a contraction of 4.2% is a bit shattering to a market which was hoping that growth is at least crawling back. The detailed data is even more discouraging. Manufacturing has contracted by 7.6%, capital goods by 2.3%, consumer goods by 19%, and hold your breath, consumer durables by 35%. The seminal fall in consumer goods is corroborated by companies like Havells and TTK Prestige lowering their sales guidance sharply for the second half of this fiscal. On the flip side, inflation seems to be finally coming under control. CPI rose by just 4.38% in November from year-ago levels, and price levels were actually flat over October for various categories. Food inflation fell even more year-on-year to 3.14%, while non-food, non-fuel prices rose by just 5.5%. That's down from 8% levels for the better part of 2013. So is inflation at least finally conquered? Can and indeed must the Reserve Bank Governor hasten his promised rate cuts? For these and other questions, joining us now are Dr. Pronab Sen, Country Director at the IGC. He's former Chief Statistician of India and perhaps the last word on India's macro numbers, and Sajjid Chinoy, the India economist at JPMorgan. Dr. Sen, Sajjid, welcome to the show. Well, Sajjid, let me start with some of the details of the data. Is IIP as bad as it looks? After all, October was a month when we had a lot of holidays. I mean, the Dussehra holidays came in, and then I guess there were some election holidays in Maharashtra, and of course, Diwali holidays.
So, Latha, ironically, what worried me yesterday a little bit more was the CPI number, not the IP number. The IP had lots of one-offs. I think for starters, IP is notoriously volatile. Don't be surprised if 2 months later, this number is revised up substantially. But there were two specific one-offs that should not be a concern. One is just a working days issue. This is what happened when US weather was very adverse a year ago. The number of working days is almost 15% less than the month before, and therefore you will have lower production. There was another one-off, which is a large factory in the consumer durable sector actually closed shop, and there'd be some sequential decrease because of that. So I would not worry too much about the October number. If you look at the high frequency data in November, you see auto production has actually increased 10% sequentially on a seasonally adjusted basis. The November PMI was at a 21-month high, the manufacturing PMI. The services PMI was at a 6-month high. So I think October was an aberration. You'll see the November numbers bounce back. For me, the concern was that the headline CPI number was very good. There's good news in lower food prices, lower oil prices. But if you look at the month-on-month seasonally adjusted momentum of core, this is the second consecutive month that number has gone up a lot. It went up 0.7% in October. It went up 0.5% in November. And if you strip out the impact of petrol and diesel, which is part of core, given the way it's defined, the numbers get even more sobering. It's 0.7 for last month and 0.8 this month. So I guess it adds up to the fact that
which elements are rising, Sajjid? Which elements in the core are rising?
It's essentially, Latha, across the board. If you look at housing, for example, if you look at personal requisites, if you look at... so only transport and communication saw the biggest contraction, but that happened for 4 months because diesel and gasoline, petrol, included part of that. So to get a true measure of core, you want to strip it out. So it was a pretty broad-based increase for 2 months, which ties up with what the November PMI told you, that output prices are going up. So the story that I draw from all of this is that there's actually a modest cyclical recovery underway in November, and unfortunately that's meant that pricing power is perhaps increasing.
Okay, Dr. Sen, let me come to you first on the growth data. I'll come to the inflation data in just a minute because I didn't notice so much concern on the core from other economists, but I'll come to inflation in a minute. What did you make of the growth data? Are you convinced that things are at least troughing out and this 4.2 is quite clearly a one-off? Let me tell you that corroborating evidence is there from industry, from the corporate honchos who come on our channel, that growth is not as good as they thought. They are not saying that they are in recession, but Havells, like I told you, told us that they were expecting 17% growth and now they are adjusting to 12 to 14. TTK Prestige, the cookers maker, the kitchen appliances maker, said he was expecting 25% growth in the second half. That is actually a normal rate of growth, and he has now scaled it down to 12 to 14%.
Well, Latha, there's something which has been happening for a while, which I think we need to take note of. There are one-off events that Sajjid talked about. I think there's a larger trend. You know, rural demand, which had been propping up the sector for the last 3 years, has started to taper, and that it's been a trend for a while. And I think we are at a cusp now. My sense is rural demand will continue to taper, and the million-dollar question is, when does urban demand start picking up and more than making up for the loss of the rural side? So, you know, we really need to keep pretty close watch. I think Sajjid is right. If you take off the one-off factors, what you're really getting is not a minus 4 point something IIP, but it's probably not very different from around zero or perhaps a mild plus. So that's really at the heart of it. So what we are seeing is features that were driving the Indian economy for the last several years are going off. And we know what the reasons for that are. You know, the decline in food price inflation is, again, one of the indicators which seems to substantiate that.
Dr. Sen, okay, before I come to whatever policy action one can do about, one can think of, how concerned are you about the core inflation? I mean, the numbers on the face of it didn't look so scary to me as Sajjid puts it, but clearly he has done his math on stripping off the impact of petrol and looking at the month-on-month increases in medical education. Yes, there is an increase in everything by about a few basis points. Would you worry that we have not yet got inflation under control?
Well, we have. You know, the fact is a lot of what you're seeing in terms of the core really reflect the wage increases that have taken place in the past. And so they will come out. The other point that Sajjid made, which was about pricing power shifting, there probably is a small element of that. I mean, you know, don't forget, we've been through 2 years where corporate investments have been extremely low. So additions to capacity have simply not happened, which means that as the economy starts turning around, if it does turn around, then you will see pricing power shifting for maybe a 7 to 8 month period.
But Dr. Sen, this long period of slowdown is also being accompanied by at a time when, you know, commodity prices are crashing and export markets are not yielding any demand either. Given these two scenarios, is that pricing power pushing up prices in the core sector, in the core CPI?
Well, no. As you know, core CPI, you have to break it up into two components. One is the part which is really being driven by services. And as far as services is concerned, a lot of it is a reflection of the delayed pass-through of previous price increases through the wages. The second is what's happening in the manufacturing sector. And there, I think the real issue is that what has happened to capacity over the last 2 years? Are we in a situation where, because of rural demand, there is insufficient capacity to meet the current needs?
Yeah, I guess there would be at least some sectors where capacity has been utilized. But Sajjid, therefore, let's come to what policy can do. Do you think, therefore, the governor should relent and advance? Look, your argument seems to be that, if anything, he should stay pat on interest rates.
Latha, I think that's quite clear from the RBI guidance, which has been quite consistent over the last 6 months. They saw this coming, a year ago. Everyone knew November would be the trough of CPI inflation. If you just look at where food prices have gone over the first 10, 12 days in December, and take into account relatively modest increases in core inflation for December, the December CPI, just because of the base normalizing, should be back up around 5.4 or 5.5%. So I think what the RBI first wants to do is understand when all of these base effects normalize, where is inflation averaging in the first quarter? My guess is it's going to be somewhere between 5.5% and 6%. I think that's the first hurdle that needs to be passed. Now, undoubtedly, are the risks abating by the day? Absolutely. With oil tumbling on a daily basis, that reduces inflation risk down the horizon. But my sense is, A, they'll want to wait to see where the numbers stabilize. B, they will want to see what the budget has to offer. And C, they will want to see, in light of what's happened over the last 2 months, whether these core dynamics are just data noise and they'll, fall and they'll normalize in the next month or two because input costs have collapsed and firms can normalize margins even without raising output prices. Or are these dynamics slightly more ominous, and that as there is some cyclical recovery in consumption and demand, that firms who've taken large compressions will want to raise prices? There are all these uncertainties. Sure. So I firmly believe after yesterday's number that I think the RBI will wait it out, probably wait post the budget. And if these core dynamics continue, perhaps, push any rate cut out, not prepone it.
Okay. No, I'm not very sure, the political and the, media noise over this contraction will give the governor that much elbow room. Minus 4.2 is a number which gets into the white papers, and the moment a contraction or an economic news gets into the white papers, it is big political pressure. Dr. Sen, 2 questions therefore. Should the governor cut rates, and is he likely to lose political space? Must he?
I agree with Sajjid. I don't think the governor will cut rates as things stand. Although my sense is that what we've seen in terms of the reduction in the headline CPI is much larger than anybody had expected, including the governor. And Sajjid is again right. Once the base effect goes, everything else staying on the current trend, you're probably looking at about 5 and a bit CPI inflation in January, February, which is again well within the comfort zone. But nevertheless, the real question is that what happens if 2 things. Number one, if petroleum prices stabilize and start inching upwards. Okay. The second, much more importantly, what we do know is that the Rabi sowing is significantly below par. So the danger of food inflation resurfacing towards the latter part of the first quarter of next year, calendar year, is something that he's going to have to keep his eyes open for.
Okay, I don't have much time, so actually only 1 minute. Sajjid, your trajectory of growth, because domestically it's not picking up, and globally countries like Russia are now down to half their projected purchasing power. So, 0.7% growth for Russia. What's your sense of India's growth trajectory, IIP and GDP for the next year?
Latha, we've been maintaining that the first half growth in India is a little bit exaggerated because all of it is being driven by government spending in agriculture.
Yes, quickly, the number.
Dr. Sen pointed out, cannot sustain. 5.3 for this year with slight downside risk after the IP debacle. And, in the best case scenario, inching up towards 6% in the next fiscal year.
Inflation?
I think it will stabilize between 5.5% and 6% in March. And what will drive the trajectory next year is, what happens to food prices, Absolutely. Where is oil, and will a growth pickup result in higher core inflation? Those are the 3 uncertainties for me. I'm looking at a 6% trajectory through most of 2015, close to that number throughout the year.
Dr. Sen, very quickly, both those numbers for the next year.
Roughly correct. On the GDP, I would take it a little higher. I would probably be talking about somewhere close to 5.5. But in my case, with a slight positive bias on that.
Inflation?
Inflation, roughly what Sajjid said. Okay. My take is that as far as non-food inflation is concerned, it would probably be somewhere in the region of 4.5 or thereabouts, with food inflation closer to 6.5.
Oh, okay, that's a fear. Dr. Sen, Sajjid, out of time. Thank you very much for this extremely enlightening conversation. So key takeaways, October industrial growth numbers did have a few one-offs, but nevertheless, Sajjid has put a downside risk to his GDP growth target of 5.3%. Dr. Sen is slightly more optimistic. But on inflation, both these economists and very respectable ones at that are cautioning that there is still upside risk. For Sajjid from Core and Dr. Sen, who watches these numbers for years now very closely, even food inflation is a threat. So Governor should stay pat. We hope the political system gives him that space. We have to take a break on that note. But coming up, International Energy Agency has cut its forecast for oil demand next year. Will crude prices tumble even further? We have an exclusive conversation with Antoine Half, the chief of the IEA.
CNBC TV 18, celebrating 15 years of leadership.